Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, November the 4th, and wanted to talk a little bit about what we saw in markets last week, where we see markets moving forward from here, and some news that came out this week from the Federal Reserve Bank and how that's going to impact markets moving forward. So last week was a strong week in the S&P 500, with the S&P 500 up 1.6% for the week. However, the small and mid cap indices really lagged behind last week, and one of the really interesting things about last week is it really was a large cap, mega cap growth week where the majority of stocks didn't perform, but again, those large cap growth stocks really moved the markets higher. And remember, those 5 companies that we talk about, the top 5 market cap companies, they make up over about 23% of the overall S&P 500 index on any given day to cause moves to move higher. So if you were underperforming a little bit last week, don't worry, as we've seen more broad-based participation this week and the value sector really carrying the mantle forward this week. So things are encouraging and going back to that leadership mantle for this week. And wanted to talk about, we had a big meeting yesterday with the Federal Reserve Bank where they finally did, it's much anticipated, but they did announce that they were going to start tapering off their asset purchases. And just in case you weren't familiar, the Federal Reserve Bank has been buying bonds, mortgage-backed securities, things along those lines since the pandemic started. And now that the Fed believes that we are in better economic shape, they're going to start tapering or stop buying as many bonds as they were during the height of the pandemic, which is strong and encouraging news for the market. But what you may see on the flip side is that you may start to see interest rates creep up a little bit faster than maybe they were going and more orderly than they were going. So you may see some increase in that. But all of that being said, we are still in the heart of earnings season, and we are really seeing tremendous results. There was a lot of fear moving into this quarter that maybe we were going to see some earnings slowdown this quarter, but that has not been the case. However, if you do miss and you cite supply chain issues or cost of goods going up, you really are seeing those stocks get pulled down tremendously. You can see 5, 10, 15, even larger moves downward. But for everyone that I can find that reports a negative number, I'm finding somebody who's reporting just as positive of a number, able to pass those margin costs on, and they're increasing just the same as the other is decreasing, offsetting that in the index level itself. So the indexes are continuing to move higher, and as we are talking right now, the S&P 500 and NASDAQ are sitting at intraday or at record all-time highs on their indexes if we close at these levels. So we continue this week to make new highs and new highs as we are entering into what has historically been a very strong season for the stock market. Now, past performance and historical data is not indicative of future returns, but it can lead us to trend lines that we can look at and observe and see as we move forward. So our outlook moving forward is we see a lot of positivity as we're seeing more broad-based participation in the market, as we see markets moving higher here towards the end of the year, riding on the seasonality and the strong earnings that we see. So big number coming out tomorrow on the jobs front, so we'll be attuned to that on how we did in non-farm payrolls tomorrow. So as always, if you have questions about what's going on with your individual portfolio or ways in which we can help you, please feel free to reach out and give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Thanks so much and have a wonderful rest of your week.